Hey, what's up guys, Tramayne here. Super awesome to have you guys back on the channel. Now, as today's title suggests, I'm gonna be going through 4 actionable steps that you can take to become a more consistent analyzer. Remember guys, part of consistency is being able to execute something consistently in a systematic way, and today I'm gonna give you guys 4 steps that you can take to systemize your analysis. Now let's get straight into it guys. The first thing that we are going to want to do is refine the pairs that we look at for the week. Now people take different approaches to refining our pairs. Some people take the approach of refining a pair where they look at all 28 of the pairs, and then from those 28 pairs they just take about 6 for the week. Now that's a great way to actually refine the pairs that you're looking at. I guess it ensures that you're always looking at the most highly profitable setups, or the setups that you decide are the most profitable for the week, and then it also refines your focus guys. I would never look at more than 6 pairs for the coming week guys. If you're looking at more than 6 pairs for the week, then you're just flooding yourself with too much information and you won't be able to keep up with all of these pairs and still be able to maximize and make those clear, concise decisions the way you're supposed to be, and I guess executing at your full potential on each one of those pairs. If you've got too many, then your focus is kind of spread guys. And then there's another way of refining pairs, which is the way that I've chosen to kind of take. I first took this approach, and then when I became more comfortable with the system that I was trading, I then took the second approach. Now the second approach is actually just refining your pairs by, I guess, looking at a certain amount of pairs that you will look at for the rest of your trading life. Now obviously you're gonna change, you're gonna manipulate, you're gonna do all of these other stuff to the pairs that you've chosen to trade, but that shouldn't be done on a regular basis. Now I would change my pairs at least one pair. I would at least change one pair every 4 months or so. I would take out the least most profitable pair out of my list, and then I would obviously replace it with a pair that I've seen consistency in the past. So I have a total of 8 pairs. I don't look at more than 6 of those pairs for the trading week, and out of those pairs I just pick which pairs basically are gonna give me some setups within the coming week. Now that is the first step guys. We want to refine the pairs that we're looking at. We don't want to look at too much information. Now let's go on to the second pair, the second step. Now the second step is that we need to know the time frames that we use. Now guys, I always use 3 different time frames. I use a higher time frame, which we'll get into what the higher time frame is and what I use a higher time frame. So I use a higher time frame, I use a middle time frame, and I use a lower time frame. Now what these 3 time frames allow me to do is they allow me to take in only the amount of information that is necessary for me to make that next trading decision, which is what is important guys. The reason why we're simplifying and making this something that's systematic is that we don't want to take in too much information, and we also don't want to leave out the information that is important to us. Now we use these 3 time frames for 3 different things. We first use the higher time frame to derive a directional bias. We use our middle time frame to derive or to look at structure, and we use our lowest time frame to determine our entry criteria. Now what this would mean is that you need to look at the type of trader that you are, and obviously plan this according to the type of trader that you are. If you are a trader that, for example, scalps your positions and you open those trades of short periods of time, maybe executing on your 5-minute chart, then maybe you want to refine this process that's into a way that actually suits you, which is maybe using your 1-hour chart for your highest time frame as your directional biased time frame, then using maybe your 15-minute as your middle time frame where you look at the kind of structure that the chart presents, and then you use your 5-minute for your scalping, or your 1 minute even if you're a scalper on the M1. You use that lowest time frame for your entry criteria. And yeah, now In addition, guys, we'll go on, or we'll use this as a segue to actually go on to the next point, which is we need to define the methods that we use. What methods do we use to derive a directional bias? Now, I'm going to make references to my own trading system, and I use structure, basically the basic most textbook stuffs, higher highs, lower lows, and that defines my directional bias. If I see a market that is trending to the upside, then my directional bias, or at least I know that I should be aligning myself to the upside. Now, I'll also be looking at structure as well, which I'll further use to define which direction I'm going to trade. But I need something simple, something objective to determine which direction this market is going in on that higher time frame. Remember, we want to trade higher time frame structure. We want to trade higher time frame directions. So we're looking at our higher time frames for our directional bias. In my case, I use structure, market structure, to determine my directional bias as to where is my higher time frame going. Next, we want to define our methods that we use for looking at structure. Now, simple guys, I use my horizontal support and resistance, and as well as my trend lines to determine my structure. So because I am a swing trader, or I love to call myself a swing trader, and I like to assume that I take those swing positions and I do swing my trades, I use my H4 for my directional bias. I would then use maybe my H1s for my structure, which I would then use to start drawing out my trend lines, whether I have support trend lines, whether I have resistance trend lines, marking out some sort of ascending structure, or whether I have horizontal support or horizontal resistance. That's what I want to focus on my middle time frame. And then once I have that down on my lowest time frame, which maybe would be my 15-minute time frame, guys, that would be the time frame where I look for my entry criteria. Now, my entry criteria would, for example, be looking at chart patterns, whether I have a continuation structure or whether I have a reversal structure, and then as well as my candlestick confirmations, guys. This is the time frame where I'm looking for my entry criteria. So now that we've defined our methods, guys, we know how we derive a directional bias from our higher time frames, we know how we isolate structure from our middle time frame, and we know how we identify our chart patterns and our entry criteria on our lower time frames. Guys, this is the most important step. We need to define these things, because some traders, one day they'll use horizontal support and resistance to identify structure. Then the next day they'll use the 0.618 Fibonacci retracement level to identify structure. And guys, that is the kind of inconsistency that we're trying to get rid of by creating a system like the one that we are going through. We're trying to get rid of us making these subjective decisions, and we want to kind of systemize everything that we're doing to be able to quantify our information and to be able to change things if it's necessary and reinforce things if they are working for us, guys. We need to quantify every single aspect of our trading. Now, after we've defined our methods, which is number 3, next we need to create a routine that reviews 2 different time scales. Now, what do I mean by create a routine that reviews 2 different time scales? Number 1, we need to be looking at a long-term time scale, and we need to be looking at a short-term time scale. What do I mean? We need to create a routine that allows us to analyze the market for a long-term time scale. For example, guys, we love to analyze this market, or we love to analyze the market or the pairs that we've chosen every week to see what we could be expecting over the next week. That is the long-term time scale that we are looking at, whether we're looking to be bullish for the next week on a certain pair, or we're looking to be bearish for the next week on a certain pair. Then the short-term time scale, guys, this is the time scale that we're looking at during the week that we are trading. For example, when we're looking at our long-term time scale, maybe we'd stop analyzing on the H1 chart because we don't want to go below that H1 and then impose our biases or our what we think structurally is going to happen next in the market. We don't want to impose our biases and our ideas on the market. So we want to restrict our time scales or our analysis over a weekly scale to higher time frames. And then on our short-term time scale, that's when we actually go on our entry time frame. Remember, maybe we're entering on the 15-minute, and so we want to look at structure on the H, or look at our directional bias on the H4, look at structure on the H1, and then enter on the 15-minute. This is our short-term time scale. When we're doing weekly analysis, maybe we look at the weekly chart for directional bias, look at the daily chart for some structure, and then maybe look at the H4 for some confirmations that might come for trades in the direction that we're looking to trade. So we understand what's happening on our long-term time scale so that we know what we're doing over the course of next week. And then while the week is happening, we need to know which time scales or which time frames we're going to be looking at to be able to execute our trades. Now, just want to review, guys. I just want to go back up through this process just so that we are all 100% sure on what we should be doing. Number one, we need to refine our pairs that we're looking at for the week. Let's not look at more than 6 pairs for the coming week. Number two, we need to know the time frames that we use. We use a higher time frame, a middle time frame, and a lower time frame. We use the higher time frame to identify a directional bias, which is which direction this market is moving in higher time frame. We use the middle time frame to identify structure. These are the important levels that we want to be trading off, whether it's support and resistance, whether it's our resistance trend line, expecting that third touch of that resistance trend line for a sell in the future. Doesn't really matter, guys. We're using that middle time frame for structure for those important zones where we want to trade. And then we use our lower time frame, obviously once price has gotten into our structure that we're looking to trade on that middle time frame, then we drop down onto our lower time frames and we identify our entry criteria to be able to execute this position. Then we go and we define these methods. What methods are we using for entry criteria? If someone trades a moving average crossover for their entry criteria, then that's what they should be looking at. We want a defined method where we don't chop and change in between ideas of how we identify certain things like directional bias, like structure, and like our entry criteria. Now, once we've defined our entry criteria, our structure, and our directional bias, these methods, then we want to establish and create a routine that reviews 2 different time scales. Like we want to have a routine that allows us to analyze long term, like having a routine every week that allows us to kind of just go through the pairs on a weekly basis to kind of just, I guess, get a longer term view of what could be happening over the next few weeks. And then we also want to have a routine, like a daily routine that allows us to isolate our analysis to the 3 small time frames, like for example the H4, the H1, and the 15-minute. These are short-term time frames that will allow us to still analyze the market during the day to be able to still make trading decisions. If we are a scalper, if we're a day trader, if we're a swing trader, if we're a position trader, we still need to refine our entries and our viewpoint of the market to identify what the current price action is telling us and how we should make decisions based off what the market is doing at the present moment of now. So that's what we use our short-term time scale for. Now, guys, I hope that you enjoyed this. I hope that you're going to go home and actually write down what we've discussed and then use this process to refine your own analysis, guys. We want to be consistent in the way that we analyze so that we can produce consistent results. Now, I hope that you enjoyed this video, guys. Definitely do give this video a thumbs up, give this video a like if it did add to your trading career, if it made you a better trader just a little bit and refined something that you are confused of, something that you wanted to do better in your trading career. Drop this video a like, guys. Let me know that I'm positively contributing towards your trading growth. And as well as, guys, definitely do subscribe if it's your first time on the channel. Otherwise, love, peace and happiness to the family that come and that spend their time and review and become better traders on the channel every single week. I appreciate you guys. I will see you guys in all the future videos that we make. This is Tramayne, your FX Chasers mentor. I'll see you guys later. Peace.